What is up, Zinger Nation? Happy Wednesday. You know what that means. It is hump day. Go ahead and smash that like. Today we'll be talking about how to find that next 10 bagger. Especially with the way the markets have been down almost 20, a little more than 20% at this point. Our opportunity to find that next company that is going to grow 10 times over the next 5, 10 years, whatever it is we have a greater chance of doing so now more than ever. So we're going to visit that kind of what we look for in some of these long-term investments, right? We're not looking at a swing trade or an options trade. We're looking at companies we could buy that really have the potential of growing that much over, a 5, 10 year period or so. We will also be talking to News by Nick. You might know him on Twitter. He's a really impressive kid, about 16 years old. He runs a Twitter account with about 5,000 followers where he's live tweeting news and whatnot. So he's really a great fit for Benzinga, as we are, like Nick, interested in news and the market. So we're going to bring Nick on just to hear from him how he got started in the market, see what he's been looking at, get some of his thoughts across the board. We will also be talking, we'll touch on oil again. We will touch on the housing market. We will touch on basically all the biggest movers of the day. So go ahead and smash that like if you haven't already. It's great to have you guys back with us today on Wednesday, on Hump Day, back on Benzinga Live. Let me know in the chat what stocks you guys are watching. If there's any stocks you want us to take a look at today or any news you want to talk about, let me know in the chat. I want to have a little bit more of an interactive day in the chat today than we've had the past few days. With that said, let's go ahead and roll that intro. Get the show started.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How are we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. All righty, y'all. So before we start, let's just talk about kind of what the biggest interesting points in the markets are right now. We have different people that are interested in different things. On Tuesdays or on Thursdays when we have Vivi Biotech Queen on, we talk biotech. Something we don't talk about enough on this show, I don't think, is the housing market and mortgage rates. Because really, I don't know if we need a reminder for anyone who was, investing or really just around in 2008 for a reminder of just how important the overall housing market is for our economy. And if you wonder why, it's really because if you think about how much money people have tied into their homes, right? It's not just home values, it's people's mortgages and how much they're paying for those mortgage rates, because if interest rates rise and people aren't locked in at fixed rates and now they have to pay an extra $200 a month for their home, that's less money going in the economy. So housing and if housing prices drops, that limits your borrowing ability. It lowers your total net worth. So it lowers people's if someone bought a house 6 months ago and now it's down 20%, they're going to have less money to be able to loan out. They're going to have a lower net worth. It might affect their spending. So let me go ahead and pull up this tweet that's just a graphic showing kind of the areas in the United States where real estate prices have already dropped. And this is from when the Fed started raising rates, which of course thus pushes mortgage rates higher and creates home values to fall. So if we're looking here, expecting less. In the biggest metros, home sellers are slashing prices to attract buyers. So in these little circles that we can find throughout kind of the Midwest and in the eastern part of the country, you can tell from the key here, this is about 20%, a 20% decrease. So if a house was listed for $1 million, now it's listed for $800,000. And you can see that in these metro areas, whether you're looking in Columbus, Ohio, Pennsylvania, New Jersey, Detroit, where we are, even down here in Kentucky, St. Louis, Kansas City looks like it's had a little bit less of a drop off, maybe a little bit less than 10%. But here are your biggest ones, which are surprising to me. Austin, I believe this is Austin. I don't know if there's anyone out there that knows Texas. Texas. Guys, keep it PG in the chat. We've got a 16-year-old guest joining us in about 5 minutes, so we don't need to be talking about all those bad words in the chat. I don't know what you guys are talking about. Yeah, I don't know. I think this is Austin, which that kind of makes sense because Austin was one of the cities that grew the most during COVID. And then Vegas, which is surprising because I don't know, like there are a lot of places. I'm 25. I've never owned a home. Like there are a lot of places I would look at potentially buying a home, but I don't think Vegas is one of them. Vegas to me is a place I wouldn't want to own a property. I wouldn't want any more reason to go to Vegas than I already have. But then you have these different California cities, San Diego, Los Angeles. So basically all the biggest metros throughout the country, whether you're talking about on the West Coast here, on the East Coast here, in the Midwest, home values are losing value. This is coming from realtor.com. So I find this interesting. And I'm curious in the chat if we have anyone who either A, bought a property or home throughout COVID, or B, was looking to and now you're not, or C, you were looking to and you still are, especially now that prices have come down a little bit. So let me know in the chat where everyone's at in terms of their, if you're looking at properties, if you're looking at homes, or where your status is there. Let's see, catching up with the chat real quick. That lake is drying up. I'd run from Vegas so fast. Yeah, and actually that's what's interesting for a lot of like people argue and talk about climate change and ESG a lot. And what I like to do when there's these kind of arguments going on where people want to pull specific stats that back their argument is look at what the free market is saying. And if you look in areas where home prices, like in New Orleans, homes on the coast near the water that used to be the most expensive are now becoming the cheapest because people don't want to buy those homes on the risk that the water's levels keep rising. So to me, that's the free market. That's the housing market telling me, okay, this is a legitimate concern that people are weighing into. It's not some like foo-foo. Oh, because I do understand that. The flip side of the argument is there are people that have been saying, oh, people have been saying Miami's going to be underwater for the past 50 years and it's still fine. And if you look at Miami prices on the beach, I'm sure they're still doing fine. The prices down there. Pablo's asking, can you pull up Tesla? Could not break 700 resistance, possible retrace to 670. Let's go ahead and pull up our trusty, beautiful Benzinga Pro. And just to let you know, Pablo, I can read charts. I would not say it's my biggest strong suit as an investor, as a trader, but I'm happy to look at the Tesla chart and take a look with you guys. This is on Benzinga Pro. This is our proprietary platform, which gives you everything you would need for trading. We have a live news feed that gets you your news faster than anywhere else you can find on the web, unless, I don't know, if you want to pay 25 grand or whatever it is for a Bloomberg terminal, but this is your next best option. We've got charts, scanners, signals, calendar, earnings, data, movers, you name it. Basically, you're all in one trading platform outside of being able to actually trade on here, but that is in the works. So let's pull up Tesla. And here's what I'm talking about, Pablo, because we can look at the chart here. We're looking at a weekly chart right here. I'll switch to daily. But what I would typically do if I'm looking at a stock here on Benzinga Pro is I'd take a look at some of these fundamentals, right? You can look at your PE, your PE, your forward PE, your price to sales, and we can look at all these things. We can look at the PE of our peers, of Toyota, of GM, of Ford, of Honda. We can look at our revenue. We can go to the financials tab. But since you're looking more for just these price action, let's just take a look at the chart. So here we're looking at a daily chart. You mentioned we were unable to break this 700. I believe yesterday we broke the 700 for a little bit. Let's see. Yeah, the high yesterday was this is the high today, is 703.69. So we did break that 700 barely, but then gave it up and started coming back down. So for me, just looking at this chart, we're not in an established trend. I could see if you were looking at this from a bullish bias, you could see how potentially this could be, a triple bottom. We found some resistance here. You want this to come back. But I would be cautious here with Tesla. And I mean, if you're day trading it, Pablo, that's different because you can buy it now and try to get a 2-3% pop. If you were looking at day trading it, I would actually go down to like maybe a 10-minute chart here. And really right here, I mean, this is a 10-minute chart. This is a pretty good point to trade off of because you have your defined out. You have your low of day right here at 681.56. We're at 683 right now. If we break that low a day, so basically if we break below 680, I would be I would be pretty convicted that we were going to move lower from there. Now, if we hold this, then maybe I would want to play this for a little day trade on the bullish side. But the reason I wouldn't want to play Tesla right now on any sort of swing trade or investment is just because I mean we have earnings coming out for Tesla in 14 days, so 2 weeks from now on Wednesday, July 20th. I don't have a crystal ball, but if I had to guess, gun to my head, if I had to bet on this, I would bet against Tesla going into that earnings report. We saw with Tesla's deliveries that came out over the weekend. I think for the first time in the last 3 years, Tesla's deliveries actually were lower month over month than they were. And I mean, Elon Musk has already come out and said this has been a very tough quarter. Tesla has done some layoffs. I would just be very, very surprised if Tesla is able to post a quarter that shows the growth that investors have been used to. But with that said, that's where I mean, those are my expectations, and that's probably similar across the street. So you could argue that, okay, the bar is lower this quarter for Tesla than it has been in previous quarters. So if Tesla just posts an okay or good to okay quarter with the lower expectations, the stock could do all right. I don't really know, but like I said, if I had to play this either way, I would play it to the downside into the earnings, just because Tesla's, let's face it, has set a very, very high bar for themselves, has set a high bar for growth. And when you're a growth company like Tesla is, with a PE of 65 plus, with a price to sales of 13 plus, you need to show you are maintaining that growth. Let's see in the chat, catching up on the chat. MD is saying, AB, you need to have Stephen Thomas on from Reports on Housing. All right, let me make a note of this. Stephen Thomas, Reports from Housing. Yeah, I told you I want to get more. I want to get more people on, because we get a lot of stock people. We get a lot of people that trade equities. We get a lot of people that trade options. We don't get a lot of people from the fixed income bond world, or from the housing market, kind of mortgage rate world, or the commodity world in general, for that matter. So I think we need to do a better job of getting some of those experts on. No problem, Pablo. Hope that helped answer some of y'all's questions. Me now is saying, looks like the cannabis stock has bottomed, loading on CGC, Tilray, and CGC. He loves CGC. So nice, you got to say it twice. Let's look at MSOS, the multi-state operators ETF. I don't know. I've just been so turned off by this industry, like investing in. This is one of those things that I think, one of those cases where you can be too early, right? And I feel that way about a lot of the psychedelic companies too, that I think have a lot of potential down the road, where it's like, if these pot companies and these psychedelic companies are going to be in regulatory battles for the next 10 years, maybe it's better for me to get into those investments toward the end of that 10 years when they're coming out of the regulatory process. I mean, just look at this chart. So I mean, I don't know, looking at this chart, you can say that you're buying it at a discount, sure, but this is an ugly chart in a downtrend. I have not been into any of the cannabis stocks recently. But I mean, shoot, Tilray at $3. If you I mean, it all depends on your time framing. Now, if you were looking at buying Tilray now and holding on to it for 10 years, sure. But if you were looking at this for like a swing trade or something like that, there might be better opportunities out there. But again, I don't really have an edge in this industry. I don't have an edge in the cannabis space. So I don't, to me, like, trading cannabis stocks is almost like trading biotech stocks, where there are so many outside catalysts between FDA approvals and regulatory insights that I'm not following on a day-to-day basis. So I just kind of try to stay away from. I do think at some point over the next 5 years or so, these investments will be attractive, and I will start loading up on some, MSOS for the long term. But my thoughts on the general cannabis industry right now when it comes to investments is, if you think about it, there are, dozens and dozens of companies out there that a lot of them are doing similar things, right? A lot of them are growers. If you're looking at Canopy Growth or Tilray or whoever it is, they're doing similar things. A lot of investors, funds in the industry foresee a lot of buyouts happening, a lot of acquisitions, kind of the bigger players eating up some of the smaller players. My thought process, I think where this ends up in 20, 30 years, I think there will be a few, Marlboros, Camels of the cannabis industry, where you can go to any gas station and buy, Tilray pre-rolled joints or whatever it is. And I think eventually when I'm ready to invest in this industry, I want to do my DD, find those companies that I think really have that potential of being the mainstream cannabis plays of the future. And those are the ones I will be interested in. All right, guys. Again, let me know in the chat what stocks you guys are watching, what trades you guys are looking at. If there's any news stories out there you want to talk about. I do see our first very special guest hanging out in the background. We've got Nicholas Brown. You might know him as News by Nick on Twitter. I will go ahead and drop that Twitter link in the chat. Nick's a very impressive kid, only about, 14, but he's doing a lot of stocks on Twitter. So we're going to go ahead. I'm just kidding, Nick. I know you're not really 14. But let's go ahead, and whenever I get a signal from Nicholas that he's ready, maybe a thumbs up or something, we'll go ahead and give him our special intro and get him on the show. All right, there it is. He's ready. Let's go ahead. Bring Nick on Benzinga Live. Nicholas, how's it going?
I'm good, Aaron. Thanks for having me.
Yeah, thanks for joining us today. So before we get started, I'm curious to hear a little bit more about your story, and I'm sure a lot of our audience is too, because you're a young lad, only 16 years old. How'd you initially get into stocks and stock market news?
So it was just, I always spent a lot of time with my grandfather and my grandparents, and he would always watch CNBC Squawk Box every morning, and I would get up early. I've been an early riser for I don't know how many years now. And I would always go in, I would say, because I would know the co-host by now, I would say, look, you're watching Squawk. And I said, and it was just a repeated process that I continued to watch Squawk Box, Squawk on the Street, CNBC over and over and over again. And then for a while, it was just, I want to be a news anchor. Ever since I was little, I wanted to be a meteorologist, but I feel that news is better and I like news. So I decided to start a Twitter account, and just it's been taking off from here. I never imagined to have over 4,000 followers by now.
Yeah, I mean, and that's really impressive. I mean, I know you followed me on Twitter today. I don't even have 1,000 followers, so I need to take a page out of your book and get a little more active on Twitter, I think. What do you have tips for me? Do you have tips for anyone out there trying to grow a social media presence, trying to grow a Twitter account?
Sure. I would just say that if you're going to start something, continue. So I always put myself down because I see that other people are getting the attention and I'm not. But I always think to myself, one day you'll be that person, you'll be getting the attention. So just keep at it. You also have to make sure that if you're going to do something, do it repetitively. So me, I'm on Twitter 24/7. Basically, it's like I never get away from my phone, my computer, or anything. So just keep doing at it. You have to keep going. You just can't post something and then be gone for a week or be gone for so many days and say, I'll come back to that later. You have to keep at it. You have to keep going. And after a while, I don't know if many people know, but I can provide the link. I was actually interviewed by CNBC's one of their co-anchors, Becky Quick. She contacted me. It was one video I posted on Twitter because I do market recap videos towards the end of the day, and that just blew up. It had like 60,000 views. And then the next day she said, she DM'd me and she was like, we would love to have you on Squawk, the Squawk Pod, which is the podcast. And I can provide that link. I loved it, and I continue to provide the news. Now, look, I'm on Benzinga, so who knows what's going to happen from here.
Yeah, and I'm curious about you're so young, you're so active, you're doing a great job. Do you have a set plan for what's next? Do you want to go to school for something, journalism related, or do you want to go for school more something finance, economy related? What's your plan?
So I was just talking a couple weeks ago to the CNBC senior vice president, Dan Colarusso, and I wanted to do an intern this year and it just wasn't ready. But next year he told me to apply for a CNBC intern. I do want to be a CNBC anchor, so I am going to go to school for journalism. And hopefully once this is all set and done, I know I'm talking so far in advance, but hopefully I will be a CNBC anchor and I will be live at the New York Stock Exchange. I am expected to go to New York here in the next few weeks to take a tour of the stock exchange. and get to meet some anchors and get to meet the president and hopefully get to see a lot of other people.
Well, that's awesome. I don't know where you're from, but I went to journalism school myself at University of Missouri, and I would very much recommend it. So if you ever are looking at schools and that comes across your radar, let me know, and I've got some people there I can introduce you to.
Thank you. And no, and I mean, I'm going to be a junior this year in high school, so I still have some time to think, but the clock is running out, and so I got to make some decisions here soon.
Yeah. So Nick, let's get to your day-to-day process. I'm curious what your system is like for curating and finding news. I mean, you post news very quickly on Twitter. You know, where are your go-to sources?
So it all depends. Benzinga Pro, I have a subscription for that. Thank you to Jason for that. And I've had it for a while. And guys, Benzinga Pro is the best. You can get your news fastest anywhere. I also use Hammerstone Markets. They have a platform too, which is good. And then just various other sources, Reuters, Bloomberg, Live Squawk. It's another news account to follow. But I just found out for a few weeks ago that Bloomberg actually has a free site, so you don't have to pay. It's called BNN Bloomberg. It originated in Canada. It is owned by Canada Bloomberg, I'm guessing. But it's a free website. You can find news. But I just say that if, again, I'm consistent with it, so it's a day-to-day process. But no, Benzinga Pro is really good. And it's not about always being fast, and it's not always about being fast and correct. You want to make sure you have everything. There's people that just say, I'm posting one of the headlines regarding a story, and that's it. That's not the way to go. For me, I do a lot of threads on Twitter, and I apologize for that because it's the whole news story. You want to get the whole story out there. You just don't want to do the all cap headline from Reuters or Bloomberg and say, that's it. And you'll see time to time, I'll post like the Reuters, the not all caps, because I like to make sure everybody is clear about it. Sometimes the all cap headlines, one, have mistakes, and that's with everything. And two, I want to make sure that it's clear for people to understand what the story is about, who we're talking to, what is happening, and just want to make sure the details are clear.
Right. And I think that's, you know, that's really good practice because like you said, it's not always just about being fast or even being fast and right. You want to be able to provide that contextual information to your readers so they truly understand the news piece. And oftentimes that news piece is shared without any contextual information and people don't really realize how that fits into the whole story.
Yes. And so I double check, and I try not to put anything on there that I don't think is not reliable. But we have to keep in mind that sometimes when they say internal memos or we have this is exclusively obtained, you always want to make sure that it's correct, because sometimes, I don't know, somebody is just, anything can happen. So really, whenever they say, whenever the headlines come out, internal memo obtained by Reuters or an external memo, something, you want to make sure that you, and I double check too, like I just don't want to say this person or this site and this person is posting this must be true. So sometimes it takes me a little while to double check. I also use the free Reuters for PIQ Suite. It's PIQ Suite. It's a platform where you can customize your news feed. And so I think that's a great platform too. But Twitter, I use TweetDeck so I customize my news feed, and I customize. So I follow about, I don't know, let's see, I follow about 1,200 people. And so I have rows going across where I have my home tab, my notifications tab, and then I have specific news people that I follow that are consistent and that I like their stuff. So one of them is from Carl Quintanilla from CNBC. I have Benzinga as one. I have Live Squawk as one. And so you can customize your feed and prioritize other news feeds, because I feel the web app, whoever you're following, you're just going to get piled up. And sometimes I lose what I'm trying to post or what I try to comment on. And I find TweetDeck is very organized.
Yeah, and I love that. And I think, like you said, I mean, you've just been doing it for a while and been consistent. I think that's one of the most admirable things about the start to your early career is that, like you said, like there are a lot of people out there posting on social media, a lot of people out there trying to grow followings. It's not going to happen overnight. And there are a lot of people that probably try to do it and get discouraged and they slow down or whatever. But by doing it every day, you've built this system to now where you are able to kind of, repeatedly get this news out and do a good job. And that's why I'm just very impressed with what you've done so far.
Thank you. And no, and it takes a lot of work. And there's just days that are like, I don't really want to do this. I'm not getting the attention. I'm not getting the attention that I really wanted. And so some days I'm hard on myself, but then the next moment I'm like, I'm going to keep going. I'm going to keep at it. And one day I'll be on TV. I'll be the next anchor. So I always have that, the side that's telling me not to go and not to do it. And then I always have that side, and which is my family, my friends, and other people that are telling me to keep going. And I normally go with keep going. And I mean, there are times it's like, I get up. So my days are very early. I'm up probably at 5:15 in the morning, and I don't go to sleep till about 11:30. So I'm up very early, and I go to bed somewhat late because I want to make sure people have the news. And it's just not bad. I mean, even though when I'm out with my family, I'm always checking social media. I get emails constantly with different research notes, different news that's happening. And so I'm trying my best. And no, and I think once someone does something once, so my school always says, my principal says, once that we do something here, it's a tradition. And for me, once I post something, it's never going away. I'm going to keep at it, and I'm going to keep going.
Beautiful. I love it. And I see someone in the chat asking, is he the brains behind Peak? I know you were talking about that earlier, so I don't know if you can take full credit for that.
No, I am not. I'm not taking full credit for that.
All right. So Nicholas, before you came on the show today, I asked you if there were any specific industries or stocks you wanted to talk about. You named a few, so I'll rattle them off real quick. If you tell me where you want to start, we'll choose between energy, oil and gas, automobile stocks, and airlines.
We'll go with oil first, because we'll go with oil.
All right. That's been top of mind for a lot of investors the past couple days.
Yes. So I'm going with the oil trade first. I want to just say I'm going with oil first, just because there's a lot of volatility out there. We saw yesterday that oil come down like $10 in just one day, and then today's bouncing back. And then we have investors and we have analysts on the street here throwing notes left and right. I was on a Twitter space over the weekend, and we were talking about autos, and we'll get to that here in a minute, but it all ties in together. I think right now where we're at, I mean, I have alarms sounding recession, recession, recession. And I also have other alarms sounding no recession, no recession, no recession. And so I think we really need to just stay focused. And I've seen so many targets for what's going to happen next year. I think that analysts and I think investors and us day to day, we need to focus day to day. We need to analyze what's happening day to day. And we have to stop predicting the future. I think it was JP Morgan or Goldman Sachs over the weekend out with a new note saying that oil could potentially go to 380. Okay, come on now. We're only at 100, and we're only at 100 now. And then you have a Citi group, Citi saying oil could go to 64 or 84. At this time, we're having notes flown all over the place, and my mind's all over the place. I mean, Twitter is just blowing up with different people pushing back, and people on TV pushing back of what they're thinking. People are debating. We need to focus essentially what's happening day to day and try not to predict what's going to happen tomorrow. Friday, we get the big jobs number for June, and we're already being whispers. I'm already seeing whispers out there that it could be a negative job number. So we're already putting out stuff that we're seeing for Friday and then next year and next week. For now, we need to stop that, and we need to go by day, because every day is a different day.
Yeah, and like you said, I mean, you have all these different crazy predictions, price targets thrown out by these banks, right? You had who was that, JP or Morgan, that you said $300 barrel, whatever, and then Citi said they saw it coming down to 65 or something. So you have just this huge discrepancy. I don't think no one out there has a crystal ball, so it's all dependent on the supply chain issues that we've seen coming out of Russia and Ukraine, and of course just recessionary fears in general, because if people are pricing in a recession, then that's going to lower the price of oil. But so yeah, I'm curious what your overall thoughts are on the macro environment right now. I know you're probably not old enough to really remember 07 and 08, and there maybe haven't really been any big downturns or bear markets since you've started following the stock market. So how are you seeing things play out right now?
And that's a good question. It's a different day. I mean, look, for yesterday, for crying out loud, when Germany markets opened, our US futures tanked. But when Germany closed yesterday at 11:30 our time, we got that big rally into the close. NASDAQ up 1%, S&P ended virtually up but flattened, Dow came roaring back. And so I think that and it's the blame game. And I'm going to just put that out there. We're having the blame game, and it's a different blame game every day. Every day we have these investors and we have these different people come in and we're blaming people left and right here. And so I think we need to stop the blame game and we need to see what's working daily. So what's happening daily. So like the data we got today, ISM manufacturing, we need to look at data day to day instead of trying to predict what's going to happen tomorrow, the next day, next few months, next year. And we need to have just calm. We need to be calm. And I think we really need to focus on the movers yesterday and what's happening with bond yields and what's happening with all the underlying stuff. We need to look to what's happening day to day. We need to look what's happening globally, worldly, and we need to just focus here what's going on in the US, but not just here in the US, to see what other data and what other news headlines may cause anything to happen here yesterday, like Germany. Normally we couldn't find anything, but yesterday I think Germany was just the obvious one, how futures tanked as soon as Germany opened. And then once Germany closed yesterday, we saw that big relief. But I also think the different sectors, data, I think it's everything is data dependent, and that's the Fed. That's a whole nother issue. And so I think the Fed's not only moving markets, data is moving markets. And as I said on Twitter Spaces, earnings are really going to be moving markets here in Q2 and heading into Q3. As we get Q2 earnings less than a month away, we're going to be pounding the table very shortly on earnings.
Yeah, and I've been saying that over the past month or so, because the biggest question everyone wants to know is, okay, when is the bottom? Have we bottomed yet? When is the bottom coming? And I've been saying that I want to wait through this month, through July, because toward the end of the month, we'll of course get the biggest companies to report earnings, whether it's Apple, Microsoft, Tesla, and a lot of those earnings I don't expect to be great. And a lot of those, if those big stocks are moving lower, of course, it's going to drag the indices down with them. So I wouldn't be surprised if that's when we really see, sentiment bottom out, is when a lot of these earnings reports come out. And one thing that I think people, will overlook is when that happens, it might kind of look like the end of the world. Oh my God, we're rock bottom. Oh my God, Apple just reported their worst quarter in 2 years or whatever. But what that's going to do is, and like you're saying, Nicholas, you have to watch everything on a day-to-day basis. It's going to shift expectations going forward. So now, it's like, okay, if they report not a great quarter Q2, now the bar's set lower for Q3. And who knows? Then we reset, and the market and investing is all about what's going to happen in the future, not what's happened in the past. So I am that's how I see it. Like, I'm going to try to play that, where if Apple does come down another 10% from now when they report earnings, I'll see that as a buying opportunity. But I don't think we're going to bottom out before then, before we get all these earnings reports.
No, and I think really once we got the auto sales yesterday with how many cars were delivered in through last week, I really think that set the stage for what we're looking like for Q2. General Motors has 95,000 cars, 95,000 vehicles they cannot ship. They're just sitting there because they don't have chips. And so I really think that the tech stocks, I really think home builder stocks, I really think semiconductor stocks, really, I think this whole Q2 earnings season is going to be a mess. And I try not to say that. I try to be very positive. I don't like to be bearish. But just from the signs that I'm seeing, look, Tesla missed their estimates. I think that was no surprise because of all the lockdowns in Shanghai, in China. And so I really think estimates need to come down. I don't think estimates really are coming down. The last time I checked, Q2 estimates and Q2 earnings were supposed to be up 10% in Q2. And just with all what I'm seeing, look, we had CEO Zuckerberg on last week saying they're going to slow hiring. We've had many bank CEOs saying that there's a world headwind, that who knows what's going to happen. And that's what I'm sticking. I'm in the camp of, I don't know what's going to happen. I'm not in the camp of recession. I'm not in the camp of let's go out and start buying. We're in that bull market. I'm in the camp that says, I don't know / it's going to be a mess.
Yeah. And that's the thing, is like you in any bear market, or at least historically, At least for most of the time, bear markets don't turn around until you reach this capitulation point, until you reach this point where sentiment has truly bottomed out and fear is totally dominating the market and not greed or FOMO. So I don't really see that happening until we get to those earnings reports, like I said. And I, I mean, I could be wrong. We could have seen the bottom, 2 weeks ago or whatever. And if I'm wrong and we've already bottomed out, great. That's good news for me too.
Right. And I think and I think we're sounding the alarm like inflation. If you're going to continue to say peak inflation is here, eventually you're going to be right. But if you're going to continue to hit the nail on the head, peak inflation, and trying to sound the alarm, nobody's really going to after a while, it gets old. That's like the bottom. If you're going to continue to say that the bottom is in, and then we continue to have a leg lower, the bottom is in, we continue to have a leg lower. That's like sounding the alarm for, I think you're wrong. We just need to stop. And I think we need to analyze day to day because look, today, last check, we were lower, but again, look what happened yesterday. We had that turnaround. And I think yields, it all depends on the 10-year yield. I think it depends on oil. And I think it depends on what's happening across the seas into Germany's economy, China's economy. And I think China's economy too is having some impact. And yesterday, everybody says with Janet Yellen and President Xi or whoever she was going to meet with, that was supposed to be some kind of positive thing for the markets. I didn't really think that was positive yesterday, where the mega cap tech stocks actually led yesterday's session. NASDAQ rising over 1%. And today, look, we're back down, not marginally, or we're okay lower, but nothing like yesterday where we saw that divergence between the NASDAQ and the Dow. I think really we need to just analyze day to day and see where the bottom may happen. Hey, if the bottom happened, as you said, congrats. But who knows? I think earnings are really going to be the big driver. I get that we're getting other data with earnings and the Fed and stuff like that. But I think if you beat top and bottom line, but then you don't give the good guidance, I think guidance is really going to be key to this quarter and beyond. So if you don't give guidance, I think your stock is really going to be punished. And we've seen that in years and quarters past before. But I think especially where we're at in the economy and where the economy is at right now, I think guidance is going to be key for every company that reports.
Yeah, and I mean, so I think we're in agreement there that earnings this month, toward the end of the month, is really going to be the driver of the overall market and could potentially be where we see sentiment and thus the markets bottom out. One thing you mentioned there, Nicholas, was inflation, and so something that I've been watching, because if we look back to May's CPI, May's, we haven't gotten June's yet. So April's CPI was lower month over month, and then May's ticked back up so a lot of people were hoping that May's was going to be lower again, and that would be a sign that, okay, we had 2 consecutive months of lower inflation. That could be a sign of peak inflation. Of course, that isn't what ended up happening. But I was digging into the CPI data when it came out and seeing which sectors, which kind of baskets of goods were driving the CPI higher, which ones weren't. And there were actually some goods that we saw get cheaper instead of more expensive, namely electronics. So things like TVs, smartphones, house goods actually got cheaper month over month. But the biggest drivers of inflation were gas prices and travel costs, which are associated with each other, right? If oil's more expensive, plane tickets are going to be more expensive. So what I've been doing is I've been watching gas prices very closely because I foresee some of those deflationary forces that we've seen bring prices and other goods down to continue. The question will just be, is the rising gas prices and travel prices enough to offset those falling prices? And for me, from what I can tell, so this is from AAA's website, we can look a month ago, the average was 486. This is just for an average gallon of gas, regular gas. Now it's 478. So it's actually come down over a month. It's come down from where it was a week ago as well. So to me, this is a good sign that potentially in June, when we get June CPI, that gas won't be as big of a driver as it was in previous months.
Yes, and that's some good news. And I think it was Carl Quintanilla that says with oil prices and gas prices coming down, if your local gas station hasn't had the prices lower, you should probably go find another gas station at this point. And as you said, 479, we'll call it 478, basically where we're at in gas. that's some good news. And I follow this one guy. His name's Patrick DeHaan of Gas Buddy Guy on Twitter, and he really analyzes it and he really nails it down and breaks down the sectors. And so maybe when we get June CPI's report, we could see some good stuff for the economy, some good drivers. But I think it was in the last report, it was like oil was up 106%. And so I think that's when the gas prices were really high and oil prices were really high, but we've seen them come down. So maybe we have peaked inflation. But again, I'm not that person to say I'm calling the bottom or we have peaked inflation. I'm just waiting day to day just to see, because I think at this point the data is surprising all of us, and even to the big people that are saying no, that's not going to happen, or I don't think we're going to get that high. And the next thing you know, it's the opposite of what they say, and they come out and say that really surprised me.
Yeah, no, 100%. And I mean, I commend that, or I admire that you're not out here trying to make predictions. You're just reporting on the news. Haven Peck, I see Haven Peck in the chat saying his rent I don't know if this means Missouri, UK. If there's a Missouri, United Kingdom, I did not know that. I'm from Missouri Haven, which is why I'm bringing this comment up. But I was actually thinking about this the other day. When I last lived in Missouri, my rent in Columbia, Missouri was like $400, and I was like, man, I miss that. That is not what I pay for rent anymore. So let me know where in Missouri you are, Haven. All right, Nicholas. So let's go from oil and gas and inflation in general to another area, which I mentioned we've seen very high inflation in, and that's travel, airlines.
Yeah, airlines, they have some bigger issues. And I don't think we can blame the airlines. I've had some family traveling out of town, and they called me up because they say that I'm the news guy, and I got a call a few weeks ago. They saying about airlines, and I said, was your flight delayed? And they said, yes. And I said, I'm very sorry to hear that. And what did they do? And so they were able, through the July 4th weekend, you were able to change your flights. I think it's part of airlines themselves, but I also think it's part of the FAA's problem. I think that we all need a compromise, and we've seen prices rise, and we've also seen a lot of cancellations happening and stuff. So I really think that hopefully within the next few months into the year to come, we can have some sort of agreement. The transportation secretary, Pete Buttigieg, was on CNBC's Power Lunch yesterday, and they were looking at all options on the table of what to do, how to help the airlines, how the airlines can help themselves. I think we need pay increases, and airlines have started to do that. But I also think you need to book flights that you know that you're going to be able to cover. You shouldn't be able to book a flight now. So this is from my point of view. From what I'm seeing, I don't think from where the airlines are at right now, we should be able to be booking flights out to November, December area, because that's just causing more issues than needed. And I know that's like months from now, but I think that we need to look month to month to month on a month to month basis of where we're at, instead of trying to book flights out, because we've seen so many airlines and so many things being canceled, so many being delayed. And that's really hurting their business too. I'm eager to hear how much they're burning, how much cash they're burning whenever the airlines report earnings, because that's really going to determine if they're going to change their strategy, and what the FAA and what the DOJ and because senators are trying to, Bernie Sanders sent a letter to the airlines and transportation secretary Buttigieg trying to say we should be able to sue airlines. I think that's the least of our worries. There's other things that need to be done. And I think for the airlines, they need to stop booking months out in advance, and maybe even go week to week basis at this point, because of so many things that are happening. And so with flights being canceled, and again, I'm eager to hear how much they save for the fuel costs and how much they're burning daily. Who knows? There were reports that they were supposed to go positive. This was supposed to be a positive quarter for them because of traveling coming back. But I have some other hopes and some other fears that that may not happen because of the problems that they're facing.
Yeah, and I kind of went on a rant about this last week before the holiday weekend, because I was seeing all these news stories about how bad the flight cancellations were going to be, the pilot shortage. I forget which airline it was, but one of them had like a protest where a bunch of pilots walked out. But yeah, and I think what they asked Pete Buttigieg about on CNBC yesterday was actually one of Bernie Sanders's plans to fine airlines that end up canceling flights. Which, I mean, look, whatever it is, if there needs to be some sort of regulation, because my whole point when I went on my rant is I don't think there's any incentive, any like free market capitalism incentive for these airlines to not cancel flights because they all do. So it's not like, Nicholas, you have the choice between, the free market would say, okay, if you buy a Delta flight and they cancel it, now they're not going to get your business in the future because you can just go to Southwest or United or American. But that logic goes out the window when they're all canceling flights, because now you don't have one that isn't. It's not, the free market isn't going to solve it. You just have to buy a ticket from any of them and hope it doesn't get canceled. So I think Bernie Sanders' plan was to fine airlines as much as like $40,000 or $50,000 a passenger for every canceled flight. And whether that sounds insane to you, what that would force the companies to do is, like you're saying, not allow customers to book flights unless they're damn sure this flight's going to take off and land at the destination.
Yeah, and I think it's crazy to see, and people were saying, I'm never going back to Delta, or I'm never going back to American. And here's what I tell them. That's happening on all airlines. Let's wake up. It's right in front of you. We've seen that. And I don't know what more that, and I think that the money, they got stimulus money. Airlines got that stimulus money. So really they should have kept employees. And then we have others that they're trying to buy more planes. How can you buy more planes if you can't even have the planes that you have now be on time and be delayed and that are trying to fly? How can you buy more planes and say we're putting more money to planes if you can't even fund what you have right now?
100%. I agree. And that was part of my rant on the airlines as well, was just like, we bailed them out during COVID, gave them all this money. They said they weren't going to lay people off, and then they ended up doing that anyway. But I've seen different, what's interesting is, because I feel like that's been the mainstream media angle. That's been the mainstream media kind of not spin, but that's been the reporting on this, is just how bad the flight cancellations have been. But I've actually seen some kind of conflicting, I think Southwest came out yesterday and said that their cancellations this summer are actually on pace for less than last summer in 2019, or maybe not, maybe it was 2019 and 2020. But at least Southwest was trying to put a positive spin on it, saying, oh, actually, we're not doing that bad. And maybe Southwest is doing better than some of the other competitors. But from what I've seen, it seems like this weekend, 4th of July, saw a lot of cancellations, a lot of delays. So I know myself and anyone else who's been traveling recently been like top of mind, like, oh my God, is my flight even going to take off? Is it going to get delayed? And it really, it's one of those things that's kind of, okay, a first world problem, champagne problem. It's not, if I'm flying to somewhere for vacation and it's a couple hours delayed, it's not the end of the world, but it's an inconvenience. Maybe you had an activity planned. Maybe you're going to a baseball game when I land in New York, and now I have to miss the baseball game because my flight got delayed 2 hours and I already bought the ticket. And so it's just not good for consumers.
No, and to that headline yesterday, I have it pulled up here. With Southwest Airlines says summer cancellations are trending well below 2020 and 2019 levels. Well, congrats, but we're still having cancellations left and right. Just because you're trying to bring some.
And what I was going to say is, what I didn't even realize when I read that headline, but I just realized it when I was trying to remember what it was, is I was like, oh, wait, I don't think it was last year. I think it was 2019 and 2020. So notice how they left out 2021. So obviously their cancellations are probably trending higher than last year. And then if you think about 2020, that's COVID. So you were going to have a lot of cancellations from COVID going through the flight crews and the pilots. 2019, I'm not sure what was happening, why there were so many cancellations. But either way, that was kind of the positive spin Southwest was trying to put on it, saying, hey, we're actually doing better than in years past. But I don't know if that's, the case overall for the airline industry.
No, and I think you made a good point. They left out 2021. What about last year? What happened last year? So I think we really need to be open to everything. And I say that to all companies. I really think when you report earnings, you're open to everything. And even on the conference call with Tesla CEO Musk saying that he may not come on the conference call until he has something big or something important, I think all CEOs should be on the conference call to say what's happening in their business from their perspective, because we see you once every, 4 quarters. So we see you maybe 4 times a year, because a lot of CEOs don't go to these big, to the Aspen Ideas Festival, to different events. And so when it's time for earnings and it's time for your company to report earnings, I really think the conference call is very important, because you hear a lot of news stuff that you don't see and you read in the report. And so I think conference calls are where that you should have CEOs, and that's where you find ideas, and that's where you hear the business from different board members, from different people on the board, CEOs, CIOs, COOs. You hear a lot of different things where you sometimes don't get it in the release.
Yeah, and wasn't it a few quarters ago that that CEO Musk said he wasn't going to join the conference calls anymore, but then he still did the next quarter? Like, I thought we got that news a while ago, and then he still ended up doing it.
Yes, and again, it doesn't make sense. That's like with the whole Twitter saga, Twitter deal saga. That's a whole nother issue. I mean, at this point, just buy the company. And look, Twitter stock is trading way below 54.20. And so again, you can tie this in too. I think when it's time for this earnings report, I don't know. Maybe they're going to close the deal in the conference whenever they report earnings. But I think this between Tesla and Twitter, I really think he should be on the conference call. I really am eager to hear what they say. And who knows, they may be moving around earnings. Look, Twitter was supposed to report that one day after the bell, and let alone they moved it up to pre-market, and then it was they were supposed to report pre-market. Then they waited till like 9:30 to report. So really, I think this quarter and for years and for this year to come, that the Twitter deal with the whole Tesla and Twitter deal, those are earnings going to be to watch, just to see if Musk hints at all on Twitter or Tesla. You never know. He may appear on the Twitter call without telling us, without telling Ned Siegel.
I mean, I don't, as a Tesla shareholder, I personally, like, doesn't make the world of a difference if he's there or not. I think it's more entertaining if I don't even know if it's CEO Musk, Techno King, if Techno King Musk is on the call. So yeah, let's check that out. Tony from Toledo, I miss you, bro. Yeah, I did see your email. I got to follow up with our YouTube people and see what happened there. I promise there's nothing malicious. We'll get you back your moderator status. So I did find, Nicholas, I mentioned earlier when we were just talking about airlines, I have been seeing some, I guess, kind of conflicting things. The Southwest was one. This is from the Washington Post last night, July 5th, 7:30 p.m. Eastern. Holiday travel see fewer flight cancellations, still some headaches. So actually there were less flight cancellations, less than 1,500 over 4th of July weekend compared to over 2,500 over Memorial Day weekend. So a little more than a month after Memorial Day weekend, we actually had fewer flight cancellations. So that's not the worst sign in the world. But still, if you pull up, like if you just Google airlines right now and go to news, you see more headlines about cancellations than you see headlines like this about there being fewer cancellations. So I don't know, maybe that's a sign that they're able to start trying to figure it out. I don't know. I'd be more concerned if it got worse over, the 6-week period from Memorial Day to 4th of July than if it got better, which it looks like was the case.
No, that's good. And I mean, look, I love the Washington Post. I love reading what they're saying, but let alone we still have cancellations, and that's still disrupting other sectors too. So that people are losing money. And so I think we really need some kind of deal soon. And that's even on the semiconductor thing. Intel coming out with an alert saying, who knows if they're going to be able to build their Ohio plant because of the semiconductor shortage. I think in dire need, we need that package passed by Congress. And I don't know why. I do know why, but I don't know why they just can't say, look what's happening with semiconductors. We really need them. We really need chips. Pass it. I don't know why we always have to try and add different things into the different packages when you're holding necessities up. That's like the semiconductor package. Who knows? The semiconductors this quarter, I really think, look, Micron was on CNBC. He did have some kind of glimmer of hope, but I don't know. The semiconductors and chip stocks, along with autos and airlines, are really going to be key to this market to see what's going to happen with earnings. Who knows? The margin growth, I think the EV margin growth and stuff like that's really going to be important, especially with Tesla and them trying to shut down factories and rebuild Giga Berlin and different factories. I don't really think more factories are going to solve the problem if you don't have the workers to fund, the money to fund, and then the workers to work those plants.
Yeah, and honestly, I'm glad you brought up the semiconductor industry as a whole because, I was doing some research, and historically, the US was actually a leader in semiconductors throughout like the 70s and 80s between Intel and IBM and all that. And then, in that time since the 80s to now, basically all that manufacturing has been outsourced. So one of the best ways we can insulate ourselves and actually strengthen our supply chain for, whenever the next global pandemic or big thing happens is bringing a lot of that manufacturing investment back to the United States, which I know there are companies and we are trying to do that to some extent. I believe NVIDIA is opening, there's one big semiconductor company in Florida. I forget which one that's called. Um, but basically, yeah. And there was actually, the viewpoint I saw thrown around by some economists or journalists in the space was when the Fed started raising rates, there was actually a potential that would increase inflation by slowing down the production of semiconductors, thus making the production of automobiles harder. So then basically the car companies would be able to produce less cars because you've risen interest rates, which is going to slow down investments into chips. And then now there's not going to be enough chips for the car space. So there's going to be more of a limited supply and people aren't going to be able to buy as much. When if you did the opposite and basically turned the spigot on and had money flow into the chip space, that might help solve that problem sooner. So there was just a lot of debating going on where it's like, oh, that is so interesting, where it's the exact opposite of what like conventional wisdom would tell you. Raise rates, lower inflation, could be like the exact opposite. So who knows?
Well, yeah, to that point, I was just scrolling through Facebook last night and I looked through a page called For the Love of Old Houses. They're selling houses. And believe it or not, housing prices, I don't remember where this was originated at, but there was a housing price. It went from like 86,000 to like 69,900. So house prices are coming down. I know some of my family, my aunt and uncle, they just bought a house. And so it took them a while. It took them a good 3 to 4 months because every time they put in an offer, either their offer was too low or as soon as they put in their offer, that house was off the market. So I think that I think the supply is another concern, but I also think demand is another concern because in my neighborhood, there are not that many houses for sale right now. And I live within different communities. I live within the Pittsburgh region. And so some houses are for sale, but I'm also seeing a lot of houses that were on the market. They actually ended up pulling from the market because nobody was buying them. And I know my former bus driver, I see him out and about, and he was going to sell his house. And here's a perfect example. He was going to sell his house, but then within the week, he says, I'm pulling it off the market. I haven't gotten anything. I can't find a place to live. There's no other houses near me that are for good price. I'm pulling my house off the market.
Yeah, and I mean, I started the show. I was talking a little bit about the housing market, where I showed this graphic that just showed the different places in the country where, let me go ahead and get it pulled up real quick, where housing prices have dropped the quickest. And that's, I don't know if you've seen this a lot, Nicholas, but I feel like on Twitter and Reddit or wherever, people want to compare this macro environment to 07 or 08 or even the 2000 dot-com bubble crash. But what I see is really different. And what I see, even though we've had raising mortgage rates, which have brought the housing prices lower. So looking at right here, specifically in like Las Vegas, down more than 30%. In the biggest metros, home sellers are slashing their prices to attract buyers. So even in a smaller metro area like St. Louis, prices are down as much as 20%. But like you said, the supply is still like there's still a shortage. The demand is still higher than the supply. So when people start talking about comparing this environment to 07, 08, it's like, what are you talking about? How are we going to see a housing crash when there's a shortage of houses? Like simple supply and demand economics 101 would tell you that when there's more demand than there is supply, the price isn't going to crash. It might come down because they might have been, absurdly inflated with basically free money and super low mortgage rates. And not to mention that you had, because of the super low mortgage rates, basically like investment firms and whatever just coming in and buying houses, taking, potential homes away from everyday families. But to me, I don't think we're at a risk of seeing that huge housing market downturn in 07, 08 that I don't think we would see that again right now with the current housing market.
No, I agree. And I think really prices are coming down. We've seen that with gas prices, that they're coming down. And It's very hard to predict. I think that the housing stocks, housing companies, Lennar, Toll Brothers, I really think when they report, they're going to issue some kind of, I don't know, alert or some kind of guidance saying what they're seeing. Look, on commodities, and tailing it back to the point, it was Joe Weisenthal from Bloomberg. He had a graphic this morning on Twitter, and I really thought it was an interesting one here. And it says, and look, and we always looked to soy commodities, to different commodities, saying they were the big driver. He says, quote, wheat has erased all of its gains for the year. Also, it looks like corn and soy are rolling over. So it looks like that the biggest that we were watching, wheat, corn, soy, all of those, coffee beans, coffee. I think once we're seeing those roll over, I think that's a glimmer of hope to what may happen. I mean, look, we've seen it was one weekend. There was President Biden, Janet Yellen, Secretary Granholm, all on different networks, and they all echoed the same comments. I even pointed out on Twitter, I said they all echoed the same comments. Recession is quote inevitable, is not inevitable, end quote. And it was just the same headline repeatedly. Yeah, there's the chart there. I thought that was a pretty good chart. Just take a look at where the gains originated from. It was 2020 and then 2021 spiking. And then look, wheat is that white line. Look at that coming down. And it looks like other commodities are also rolling over too.
Yeah, I mean, this wheat line, the white one, it reminds me a lot of Chevron's chart. You got this huge spike up during the Russia-Ukraine, and then basically gapped out and given up all those gains. And it basically tracks perfectly to Chevron, and I'm sure, just the XLE and other energy companies. And it's because this idea that with raising oil prices, it's going to cost more to ship your wheat. So as gas prices comes down and oil prices come down, it should bring the other commodities down with it. And yeah, as someone in the chat pointed out, I absolutely love Joe Weisenthal, or Weisenthal, however you want to say it. So I appreciate you bringing him up. I think he's a great source for information. And also, what I like about him is you're not always going to get the same take as you're going to find everywhere else. You're going to get sometimes some outside the box thinking, which I like. Do you have off the top of your head like a top 5, or actually let's do this. Let's do Mount Rushmore. So you pick your top 4, like financial news follows on Twitter, like specific individuals, not like Bloomberg.
Okay, that's hard because, again, I follow over 1,200 people, and I feel that all their content is very worthyable. Joe's going to be one of them. He tweets out charts constantly. Joe Weisenthal from Bloomberg.
Okay.
Liz Ann Saunders from Charles Schwab. She posts so many charts in the morning and afternoon. Love her. Carl Quintanilla from Twitter. Carl Quintanilla from CNBC. He posts a lot of macro. He posts a lot in regarding different stocks. Like he posted the one day we got the 26 downgrades from either Goldman or JP Morgan or one of the big banks. He posted that full list. So Carl, I love seeing him on TV and Twitter. And lastly, I'm going to have to go with myself, the top 4.
Okay, there we go.
I also provide a lot of information too, so I can't leave myself out. But no, I think Joe, Carl, Liz Ann, and many others, they really nail down to the point of what is happening. And Joe is a great guy. Loved watching him on Bloomberg. Now he does the co-host of the Odd Lots podcast. Love listening to that podcast and love following him on Twitter. Liz Ann Saunders of Charles Schwab. Love listening to her when she's on CNBC. Love following her on Twitter because she posts about the shipping rates of Los Angeles. She has that weekly chart, and she really analyzes it of what's happening. So I love following her. Carl from Carl Quintanilla. He's always been a big inspiration to me.
Yeah,
I said that repeatedly on Twitter. Love him. And myself, I feel like I provide a lot of great charts. Sometimes I'm not on the chart side, but the news side.
Right. Yeah, no, and I agree with all those picks. Definitely some great content there, especially the last one that you included there on the Mount Rushmore. But yeah, I love Odd Lots too. Tracy Alloway and Joe Weisenthal do a great job on that. If you're honestly, I think this would be a good read for you. There's an old New York Times article about Joe Weisenthal from back when before he was even with Bloomberg, when he was still with Market Insider. That's called, the headline of the article is Joe Weisenthal versus the 24-hour news cycle. And it's just about how kind of obsessive and insane Wiesenthal was about like following the news, especially early in his career. And I read, it was pretty like inspirational for me working in financial media. And I assume if you read it, you'd feel the same way.
No, and I haven't read that. I'll have to go check that out. I'll put that on the bucket list. There's a lot of things that I really need to get caught up on because especially
I'll email to you.
Okay, good. I mean, look, I'm ready to go. I'm going to New York, and I'm going to shout out Jay Woods, Chief Market Strategist of Drive Wealth. I contacted him. I said, would we be able to do a tour, see the opening, closing bell? And he said yes. So I said, thanks, Jay. I really appreciate it. So I'll be at the New York Stock Exchange Monday in the morning for the opening bell, getting a tour, and then I'll be there on Tuesday. It's the last week in July. I'll be there Tuesday in the afternoon to watch the closing bell and meet Scott Wapner from CNBC and different anchors. So I'm looking forward to the New York trip and just exploring New York because I really haven't been to New York, and that's always been a dream. So I'm eager to go there to New York, and I cannot wait. And people are already asking, when you're on vacation, are you going to be on Twitter? Yes, of course I will still be on Twitter, providing you the news, pictures, so you don't have to worry about that.
Sorry, I probably shouldn't be doing this on live, but I'm checking our Twitter DMs right now. I think this is the real Martin Shkreli. I did get a response back from Martin. All he said was, hey. So we're trying to lock him in for a guest appearance. I'll let you know. We are also working on I don't know if you guys have seen the Radio Shack Twitter account, kind of been off the walls. We're working on an appearance with them. So we've got some good guest appearances potentially coming up, but nothing better than this one that we have right now with my man, Nicholas.
Thanks, guys. And no, if you guys follow me on Twitter, I'm starting to become a music fan, a music geek. I follow 2 accounts on Twitter that I think that really provide music, at Song Philosophy and at concert_feeling. I feel like the old music, and my dad's a big David fan, a lot of big fans on here. So, I'm starting with the music. I'm starting with Twitter. I feel like I don't get sleep anymore, Aaron. Is sleep really necessary when we're having a bear market?
Yeah, I mean, look, you figure out, where your priorities are going to be. I would say that, what you're doing is very impressive and you're setting yourself up for a very successful career. It's always important to try to maintain that balance, try to maintain that work and passion balance between, making sure you're spending time with family, friends, getting time to rest, getting time to take care of yourself. And I think that will end up getting you further than if you go 100% full obsession to the point where you get burnt out.
True, but I feel like the best news always happens early morning when people are sleeping.
Yeah, no, 100%. And that's why, Joe, for example, is up every morning at like 5 a.m. tweeting what I miss. It's the first thing he does when he wakes up. He hops on Twitter and tweets. Maybe it's even 4 a.m. I don't know what time that guy wakes up, but
I've seen it at like 3, 4 a.m. because there's times I'll roll over and I'll look at the clock and it's like 3:30 a.m. and I'm like, okay, Joe, what's going on here? Oh, no, it's been like, there's times it's like what I miss at 3:30 a.m. I'm like, oh, dear God, I'm ready to go back to bed.
Yeah, no, and that's the thing is if you want to compete with guys like that, you got to get up that early. But I'm saying then that's where you got to make that trade-off is saying, okay, if I want to get up at 4 a.m. to cover the news, then maybe I'm going to bed at, 8 or 9 p.m. and making sure that between 6 and 8 or 9, I'm spending time with family and taking care of myself, whatever. So, and I see Night for Humanity in the chat is saying at your age, sleep is super, super important. Look, Nicholas, I'm not, parent giving you any advice. I'm trying to teach you what I've learned from what I've done wrong from, in the last 9 years from when I was your age, 16 to 25 now. And I would just, again, reiterate that I think a balance is more important than basically anything else.
But I also think that, like me, I'm not a big afternoon naps person, so I don't really take naps. But I think going to bed late and getting up early, and I'll take advice from Carl Quintanilla on YouTube. He says he always wanted to be the first in and last out. That's with me. I want to make sure that, because again, I'm busy too. I help my family. I'm with my family constantly. We live with radiuses each other with like a 1 mile radius, if that. I'm always spending time with them, and even like, we're sitting out on the porch. They're asking me about news. We're talking about our day. And next thing I know, I have the telephone and it's like a Twitter notification saying something big's happening. I'm like, keep talking. I'm still listening. We're still paying attention. But I think that really, it's hard to put technology down. It's really hard because we're all connected to our phones. We're all on social media, Facebook, Twitter, Instagram, Snapchat, TikTok. And I really think, and so is my family, I've got them addicted to Snapchat, Instagram, and all that funky technology. But no, I think that there should be a time, and I have that habit of breaking that time because I'm always connected into news. And again, I'm the odd one, and that's what I've been saying for like the past 3 weeks, Ryan or Aaron. People were saying I'm the odd one. They're like, you're the odd one out. I'm like, yeah, no kidding. I've been the odd one out. All my friends say that I'm the odd one out. So I'm like, okay, I'm the odd one out. Count me in. Do I win a prize for being the odd one out?
Yeah, and I see some people in the chat basically saying, "Oh, you should, be a kid and not act like so much of an adult." But look, if that's who you are and that's where you get your pleasure from, then that's who you are and that's what you should do. I mean, at the end of the day, is I think, I most people would love to be, or I'll say it this way. I think you're lucky to be at your age already so passionate about something that you can make it a career out of, because there's so many people, myself included, at 16, sure, I had interests and I had things I thought I was good at or things I could go do, but I wasn't, oh my God, I know this is what I want to do. And I know I want to be on CNBC. I know I want to, and I was always jealous of those kids. I was always jealous of the kids that were 17 that knew they wanted to go to med school and be a doctor. Cause I was like, oh God, that seems easier knowing what you want to do than having to go try to figure it out when you're 18, 19, and you already have all these other things going on in your life and you're changing, your body's changing, your mind is changing. And now you have to try to pick what you want to do for the rest of your life.
No, and I think that the longer you wait around, the less opportunity you're going to have. And that's like the first in and last out. I think that's with me too. Whoever I work for doing interns, I always want to make sure that whatever I'm supposed to do is done right. And it's, it's not prolonged. But I also think too, because a lot of my friends, some of them have jobs, some of them don't. And sometimes we're together and sometimes we're not. I feel like having that alone time too. I like alone time. I'm that person where it's like, just leave me alone. Let me be me. I feel like alone time also builds up because I'm always thinking constantly, what can I do to get better? How can I do this better? How can I improve this? How can I improve that? And I always think too, like, not many people know this, and I'm going to say this now, but I'm the official announcer for my school's basketball games. We stream them. I was asked to do it. I'm like, sure. And so I said, sure, I'll announce, because they all know I want to be a news anchor. And so again, opportunities. I didn't wait. I always put an email and I always put the word in saying, hey, do you guys need this? Hey, do you need that? And that's with me. If anybody really knows me, I'm always that helping hand, caring hand that will always do whatever that needs to help. That's with basketball. I'll say, hey, do you need this at basketball? And I'll stay at school from 7:30 in the morning till like 9, 10 o'clock at night. And by the time I get home, it's shower, heading to bed. And that's okay with me. And I'm that person that will always put out a reaching hand, that will always put out that email. Hey, do you need this done? If so, when do you want it, or how this? I always try and take it to the extra step because I know that opportunities are limited and you should always go full force right at it when you have that opportunity.
Yeah. So I see someone in the chat saying, take the jacket off, put on a tee. Have you thought about, if you ever wanted to, instead of trying to emulate like a CNBC anchor, wanting to be kind of a new age financial reporter that's more trying to connect to a younger audience versus trying to be more establishment on CNBC?
So that's a good question, because last week I went down to a local church near me. My family and I go once. It's the first Saturday of every month. We go to breakfast, and they had me help out. And someone to take the suit and tie and jacket off. Now I'm just that person that likes to dress up, and even from here, like I have like a collared shirt on. I wore a collared shirt down there, and my dad even said the same thing to me. Why do you have a collared shirt on? You're going to help at a breakfast. I said, just looking nice. You never know who you're going to run into, who's going to walk in, and you never know. It could be the mayor. It could be anybody. So I'm just that type of person that for any occasion, I'll dress up, collared shirt, even if it was just a collared shirt. Like I didn't even have to wear the suit and tie jacket today, but I said, yeah, why not? Because you never know who's watching. You don't know what's going to happen next.
Yeah, no, I mean, I admire that. I can't say I'm the same way, but I admire that. The reason I asked that is because we talk about this sometimes at Benzinga, where you look at what Barstool has done, where they've become, kind of this new age place to go to for sports news. They didn't do it by being, the same as ESPN. So we've had that conversation here a lot at Benzinga, where we're like, maybe we should try to be, and I understand Barstool is problematic. I'm not saying we should try to emulate them in every way, but I'm saying maybe if we're able to emulate them in the sense that we are presenting ourselves as like a younger, cooler, not as stuffy, not as stuck up CNBC, maybe young people will respond better to that. And we do have a younger audience, tends to be younger than, our competitors in Bloomberg, Yahoo Finance, CNBC, you name it.
No, and I think too, I have this feeling where I think that if you're dressed up or you're going somewhere better, you're always, I don't know, going to get the looks, or just going to say, that person looks nice, wonder. And that's like with me, when if I run into the grocery store or anything, and I have some kind of like colored shirt on and nice dress pants or dress shoes, I always hear the comments, he looks nice. He doesn't look that old, but I wonder what he does for a living, or does he work somewhere professional? And it's just, no, I just feel that I don't know who I'm going to run into. I don't know if the mayor or the president or a congressman is going to be walking down the street. And I feel like, because my school attires actually every day is a shirt, a tie, a dress shirt, tie, and suit jacket. And so I always think I'm just trying to resemble my school community, who I am, who I'm representing. And so I feel that the tie, in some occasions, like TV interviews, online interviews, always should look nice. And I mean, look, there's some days that I say, I'm not throwing a collared shirt on, I'm wearing a t-shirt. And that's like some days, like Fridays, I'm always wearing a t-shirt because it's Friday and I'm not always dressed up. But even like here, and I'm sitting at my desk or anything, I'll have shorts, shirt on, but nothing too professional. But I always think if you're always going to go in front of the camera, you're going to be out in public, you should dress the way you want to be remembered, not wear like a shorts and a t-shirt. And then if people say, hey, let's invite him to a party, wonder what he's going to wear. Probably a shirt and pants, or just a shirt and shorts. So I always want to be that person. I'm always that person. It's like, I don't know who I'm going to meet, who I'm going to see out in public. Let me make sure I'm dressed nice, just in case anything happens.
Yeah, I mean, and I think that's great life practice, because like you said, you never know. Like, you could be, the one day you go out in sweats and a t-shirt, Andrew Ross Sorkin could be walking down the street, and now you don't get to meet him. Nicholas, I want to let you, if you got to run, I want to give you the opportunity. I know I asked you to come on the show for like 30 minutes, but we've been having such a good conversation that we've been on for about an hour now. So I know you're busy running your Twitter account and whatnot. So if you got to run, I'll let you get to it.
I have all the time in the world. I don't have to run.
Oh, beautiful. All right. Well, we've got about 12 more minutes left of the show. Then let's just take it home. Let's see. Let's try to wrap it. How about we do this? How about we rapid fire through some stocks from the chat? We'll have some people throw out some stocks. I'll pull them up on Benzinga Pro. We'll look at any recent news headlines. We'll look at the chart. And yeah.
Okay, that works. Yeah.
Yeah. And then while we're waiting for the tickers to fly in the chat, I'm curious, because I've talked about your whole process and how you gather news, your Twitter account, your social media strategy, what's potential for the future. Are you currently actively investing?
So, no, I am the person. So no, in my family, no, but I have other family members that come to me and ask for specific stocks and for where they're at. So really, you should have a diverse portfolio. You should have some names in almost every sector, because that's how the world is. Like, you're not going to just run in to have one stock and that's it. You should be diversified. Regarding crypto, I am not a big crypto fan. I don't understand crypto. And to me, from what happened on CNBC, whenever that guy asked about regarding the one stock and he didn't know what to say, and he said he has an audio issue, I always make sure that who's investing here in my family, the specific stocks that they want, I always ask, do you know what the company does? And so I always think, if you know what the company does, then you should invest in their stocks. But if you don't quite understand what the company is, what they're based upon, you shouldn't invest.
Yeah, and that was Mark Minervini talking about Upstart on CNBC. Just a classic clip if you haven't seen it. And I'm with you there, man. Well, I'm with you in one area. I'm not really with you in the other. I got to be honest. So the area I'm with you, I don't have any crypto. I've never been the biggest crypto guy. But the area where I got to disagree with you is on the, I don't hate diversification, but my style as an investor is more to find like 10, 15 core companies and core investments in my long-term portfolio versus say 50.
No, I understand that too. And for my dad, he owns, let me see here, in his retired portfolio in his 401k, he has McDonald's. It's going up over the long term. And there's like McDonald's anywhere. So really stocks, I would say companies, Dollar Tree, Dollar General, McDonald's, stuff like that. Those stocks you could own because they're popping up everywhere. Anytime there's like a space, it's either a Dollar Tree or Dollar General going up. So I would say McDonald's, Dollar Tree, Dollar General, those stocks some of my family members own because I says they're everywhere. But I'm eager to hear what the chat says and what tickers that they're saying.
Yeah, so the first one I saw was Neo, and this one's interesting because I haven't checked it out today, but Neo's trading down more than 7%. We have this why is it moving on Benzinga Pro. So this is one of my favorite features about Benzinga Pro. If you're looking at a stock and it's up, up or down 2-3%, we can see exactly why on this why is it moving. So it's saying shares of Chinese companies are trading lower after Shanghai announced it will be conducting mass COVID-19 testing in several districts following a rise in cases. So essentially, people have known that this is a risk for China recently because China has said it's going to stick by its zero COVID policy. So it looks like China stocks across the board are trading lower today off this news that there's a potential new outbreak in Shanghai.
Yes, and there was an article, I believe, from Reuters this morning. I posted earlier this morning that says with the testing, I really think that a lot of these small EV stocks, so like Neo, I can't think. So Neo, for example, I really think if you're going to get into the EV space, they're going to have a hard time competing with Tesla, General Motors, Ford. So I really think that a lot of these small EV and other stocks, they're going to be really hard to see who wins, who's going to win the battle with Tesla and EV. So Neo, okay, I could go with Neo, but again, I always look at the trend line, so 50, 100-day, and 200-day to see where those stocks are at. And so Neo, I'm not really saying that's a win because they're going to have a lot of hard time competing with the other big EV and auto stocks.
Yeah, and I mean, speaking of Chinese auto stocks, we saw the headline yesterday that Boyd, which is, of course, the Warren Buffett-backed Chinese EV ticker BYDDF available on the OTC markets, actually surpassed Tesla as the number one seller of EVs worldwide. This is pissing me off, Nicholas, I got to tell you, because I've been talking about Boyd for a while on the show, and I've wanted to invest in it for so long. I just don't have like the capability to buy the OTC stocks on my brokerage. So I don't know. I missed out on this one, I think, but who knows? Maybe I would have bought on this top and then sold it for 30% loss anyway.
No, and I think too, I was always given the advice too, whenever you invest, have multiple different brokerages. So you could have Fidelity, Robinhood. And so try and make sure that you just don't have one account connected to one. Try and have different platforms so you know which sectors and different things here. But no, for Neo, I think it's hard for a lot of these small companies that are going public. We've seen, Aaron, too, IPOs. And with the IPO market, we're just in a very tough market where we've had companies that are listing, and the next thing you know, they're going bankrupt.
Yeah, I mean, especially the SPACs. I mean, and that's where, I mean, throughout COVID, when the whole stock market was hot, you could just throw a dart at the dartboard and any stock was going up. These SPACs that had no regulation through their, or not no regulation, but a lot less regulation than the traditional IPO process. I saw a graphic on Twitter. I wish I could pull it up right now, but I'm sure I wouldn't be able to find it, where it showed all of the, or not all of the, but like a group of, say, 5 SPACs original kind of guidance numbers for their expected revenue for 2021 or 2022, and then what their actual numbers were, and none of them were even close. And so I think we saw a lot of that froth in the market during 2020 and 2021, and now we're seeing really where that's coming out. I mean, look at this one. I mean, look at Birds. This was a SPAC that IPO'd at $10 or went public at $10. It's now trading at 43 cents. And unfortunately, there are a lot of stocks that look like this, right? We want to pull up Clover. You want to pull
Yeah.
up, I mean, even some of the more popular SPACs, a lot of them have now come down to below that $10 level.
Yes, and I think that's the problem here. I think everybody was eager to get into list, and get into buy. But then whenever we've had these, I think the SPAC market and the IPO market really has collapsed. And I don't remember the stat that CNBC shared last week. It was an astonishing stat. It was like we had so many IPOs last year compared to this time this year. We're not even at half the number from last year, I don't think. And so I really think that right now is not the time, but where we're at with the economy and where we're at with everything is not the time to say, let me pair up with this SPAC, or let me go with an IPO merger and a SPAC merger. I don't think that the SPAC market and the IPO market is holding up very well. Look, Clover, Neo, and different stocks too that are coming down to the wire. I think that you should just stay out of those completely.
Yeah, and I mean, it's tough. I mean, and like especially during the SPAC, when we talk about how these market cycles, and for a market right now, it's fear is kind of driving the market. But at that time, it was greed and FOMO. So if you see these companies that are getting linked for SPACs, and it's going from $10 to 12 in 2 minutes, and that's a quick 20%. You want to get in on those, on one of those. You want to get in on those. It seems interesting. It seems exciting, and I think we've seen throughout the past year or so, really a lot of those companies fall out of favor. And really a lot of these companies that were even like looking at SPAC deals are now backing out of them, just because they don't even want to be associated with that.
Yeah, and I mean, look, we've had a couple of them. It was last week, and there's a lot of companies that are waiting. They're trying to find the perfect time, and people keep trying to throw out dates when the perfect time is. That's like with everything going on right now. We don't know when the perfect time is for you to start listing, because who knows, Aaron, what's going to happen when they list. As soon as they list, they could immediately collapse, and they would just be losing money, and it would be like, is this really worth it? So I think that there's still a lot of people that are waiting. There's still a lot of companies that are waiting. They're just trying to find the perfect time, and they don't know when the perfect time is going to be.
Yeah, no, 100%. Let's see real quick. I'm just going to go through the chat and see if we've got any more tickers that people want to check out before we wrap up, because we do only got 3 minutes left. Again, guys, I'm joined today by Nicholas Brown. You can find him on Twitter at News by Nick. I'll drop that link in the chat one more time. Really impressive stuff what Nick is doing. And Nick, I'm excited to maybe you can become a regular guest or regular appearance on here, because I think you offer some great insight, and also for yourself, it'll be good practice, kind of being in front of the camera, speaking to an audience, and everything.
No, thank you. And look, guys, pursue your dreams. That's what I'm trying to do here. And it's not just all about as soon as you tweet, you think you're going to get the attention. It's going to take time. And so that's like for me here. I didn't expect for Aaron to say, come on, Benzinga show, we can do this regularly like today. Like, this was a surprise when he said you can come back as a regular guest. I really appreciate that, because I really think here of where we're at right now that a lot of people are shy, and that's okay if you're shy, but practice makes perfect.
100%. And that's it. It doesn't really matter it does matter your skill level to some point, but really, as long as you have a certain amount of skills, like to pass this threshold, then it's really just all about the amount of work you put in. It's really for anything. I mean, even the best NBA players, I know you're a basketball guy. Sure, they have to have a certain amount of athleticism or height or whatever it is to get to that point. But once you're there, once you're past that threshold, it's all about just how much time you put in. And it's like why all the best guys, whether you're talking about LeBron, Kobe, Michael Jordan, all happen to be the hardest workers. It's like, oh, that's not a coincidence.
No, and I think really because there's people that try and come on here and come on anywhere and say and tweet and say that that who cares about them. We need to really stop. I think the negativity has gotten to a lot of people, including my friends too. I know there's a couple people that I follow on Twitter, and it was like they left Twitter, like they haven't tweeted in a while because of all the negativity. I do really think that you need to put the negativity aside. Like me, I put the negativity aside, and I'm trying my best. I'm continuing to go at it. And I tweet a lot. I get that. But again, one day I'm going to, and again, there's people that walk down the streets here. There's people that tell me, that remember me from when I was little. They say, hey, he's going to be on TV. He's our news guy. I had a couple people, believe it or not, come down the street, and because I wanted to be a meteorologist, they were coming down yesterday. They said, hey, can you cancel the rain? I'm like, I don't know if I can. Hey, it may rain. They were like, that's okay. You're more accurate than the other people on TV. And I'm like, thanks. But no, I think practice makes perfect. As you see, I continue to do this. And when I was a couple years ago, I actually appeared with Jason, the CEO of Benzinga, here on their YouTube page, explaining to his children too a little bit about stocks. And I think Benzinga really started off. It was Squawk Box, then Benzinga. And now look, almost 4,600 followers here on Twitter. I cannot thank everybody enough. I can't thank you enough, because you don't know what I'm feeling. I'm feeling just like joyous to be on here, to give advice, to keep doing what I'm doing. I appreciate the comments here. Keep it up. Great job. Thank you guys.
Yeah, I mean, look, wish there were more of him. We are going to get more Nicholas on the show. And like, I mean, I appreciate that. I'm glad we can be a part of your journey, but I'm in the same realm, you know, admiring what you're doing, jealous of what you know, you're able to do so far at your young age. And you know what, you're a really smart kid. You want to know why?
I'm ready.
Because so you said you were interested in being a meteorologist. Whether you go into meteorology or into covering the economy, you can be perpetually wrong and keep your job.
Exactly. I mean, look, it's supposed to rain here where I'm at for like this past week, and it hasn't rained yet. And so there's all those people that are like coming on, that are tweeting, and they're like, it hasn't rained yet. And no, I think too, accuracy is something that we're not perfect yet at. I'm not perfect at it. I can't predict what's going to be happening with the news. I can't predict stocks. I don't have that crystal ball, and I wish we all did. But no, and I think accuracy, a lot of people think, oh, you got to be accurate to be a news person. You got to be accurate to do this. Not really, because we've seen so many people back down, and I'm not backing down. I'm going to continue to keep going no matter the challenges I face, no matter anything that happens. I'm always going to be trying it. And maybe one day, I don't think so. I can't think of the negativity. Negativity is not my part of thing. I got to think positive. You got to keep thinking positive, people. Whatever you pursue is going to officially happen one day. You just got to keep at it.
100%. Well, Nick, we are running out of time. It is past 1 p.m. Do you want to give us our send-off today?
No, I'm not that good. You got to do the send-off, Aaron. Maybe another time.
All right, well, fine. I'll do it, but you got to hang out with me while I do it. All right, guys, that was a beautiful Wednesday, hump day episode of Benzinga Live. We will be back tomorrow, 11:30 a.m. Eastern. Make sure to come by tomorrow for some more top stories in the market, some trade ideas, some stock picks. We will be back. Until then, smash the like, subscribe to the channel. We will have Money Mitch coming up next. Mitch has a couple big interviews. He's going to be talking to Peter Tanis, the founder and chairman of Lynx. And then he will also be talking to Ivan Feinseth, an analyst at Tigris Financial Research. So big show for Money Mitch coming up. This stream will automatically redirect you there. Until tomorrow, stay green.